Oh, hey everyone, I thought I was done filming for today and, I may have just had a shower and gotten totally blindsided by this report from Zillow and, things might still be a little unhinged around here, but holy crap. Bloomberg just had the following from Zillow in a headline piece here, and we got to talk about it a little bit. Oh boy, here we go. All right, here it is. Dang. Quote, "The market is softening." The housing market, that is. See, Zillow does homes. Full stop, says the CEO of Zillow in an interview. He says, quote, "I think the toughest macro lens is that inventories continue to plummet. Flat transactions would be good this year, and I don't know if we will get there." Okay, this is challenging. So we got to talk about this, and we get a little bit more color from this excerpt by going to the earnings call. Not the interview, the earnings call. So let's jump on over there and try to understand what Zillow's seeing, because it's a good heads up for the housing market. Remember, Zillow is a company that has a lot of data on us as individual searchers for homes. And obviously one of the first things to get hit, you would expect at least, if the housing market was beginning to slow down, would be individuals' willingness or interest in searching for homes. So let's jump over to the earnings call and see kind of what they've got compared to expectations. Now, first, it's worth noting that our expectations are that when interest rates shoot up 4%, that we would have potentially a 40% drag down in purchasing power. But of course, if you have excess demand in the amount of 40%, you might not actually see home prices go down at all. So that's sort of like the backdrop of what our expectations are going in, that maybe Zillow would tell us they're starting to see some forms of cracks. I mean, obviously, when they already say the market is stopping or softening full stop, that's already a problem, and they're talking about tough macro, right? So let's jump into the earnings call here, and let's just snoop around a little bit in the earnings call. So they talk about how inventory still in March was down 23% year over year. And remember, the last year is essentially a year that gave us 20+% across the entire United States in increased prices, which is incredible. However, even though inventory levels, and this is one of the big things that people keep talking about, they keep saying, oh, well, housing prices can't go down because inventory levels are down. That's true. Year over year, if this right here is March of 21, then, maybe over here, I should actually draw it kind of like this. Maybe over here is March of 2022. Now, why did I actually draw it with that little inflection point up? That's because take a look at this. New for sale listings were less strained in March, up 36% from Feb levels, but still down 9% year over year. So actually, we're probably doing a little bit more like that, trying to get back just 9% down essentially here from those March of 2021 levels. Okay, interesting. So kind of seeing a little bit of an inflection point where maybe inventories are starting to move up, but then again, that could be seasonal, right? I mean, who lists their home in February? That's lame. You sell in March, right? It could be entirely seasonal. So what else can we see here? Transaction value growth trends are meaningfully softening. And even the most respected prognosticators have, and this is I think just a typo here, I think distinct or maybe different views in terms of what will happen next. In other words, you got people like me who think prices will probably come down 10 to 20%. And you got a lot of people saying, well, there's just still not enough inventory, so we'll probably just have a soft landing, which is kind of exactly what we were told in 2006 when then Fed Chair Ben Bernanke says, well, we've never had home prices come down across the board, so probably won't have that happen now. Oops, oh wait, oh. Damn, didn't see that one coming. Okay, anyway. Then Zillow talks a little bit about how they're getting out of, obviously, the iBuyer business, which is where they buy homes and flip them. They only have 100 homes left to go. They've almost completely gotten out. And if the market kind of tanks after this, they got out at the perfect time. And they got a lot of hate for what they did a couple earnings reports ago. But honestly, it could end up having been a pretty smart move. They talk about how more people save homes on Zillow when they have 3D tours. This, in my opinion, is kind of obvious, though, because you're more likely to go back to the listing more often when there's a 3D tour. Duh. Then they talk about right here how they still have high occupancy rates in rentals, and that makes it harder for them to make money from landlords who want to re-rent properties because they offer a rental service and credit screening services. But here they talk about affordability challenges with higher mortgage rates, and we're starting to see early signs, not only what we heard earlier of inventories going up, but also earlier signs of low rental vacancy issues subsiding. That would mean we're starting to get more properties potentially opening up, and that could potentially, for one reason or another, help stabilize those rents from continuing to just skyrocket. And they also talk about this deceleration in the real estate industry's growth. So they kind of stop short of saying like, hey, we're heading towards a crash here. But they do say that we anticipate market headwinds. And then they say, hey, you know, if there's some terrible storm and the market grinds to a halt for a long time, you know, we could change our views. But hey, let's just talk about 2025. Okay, so what do we glean from this? Well, in my opinion, what we glean from this is really what they didn't tell us in relation to what they did tell us. Hey, we're starting to see some softening in rentals, which when you see softening in rentals, that means you generally get less landlords who want to get into the rental business because it gets tougher, right? And then potentially you get landlords who want to get out of the rental business, which could mean more for sale inventory, people who want to take advantage of a top. We're already seeing housing inventory trend up. We don't know if that's seasonal yet, so we'll have to wait for a little confirmation on that. But we're still down compared to last year, so it's time. And then when they're basically asked, hey, like, are we gonna have a market crash? You're like, well, you know, if there's a terrible storm, we're focused on 2025. But yeah, things are softening. But yeah, don't worry. Folks, I think it's obvious you should be a little bit concerned about the real estate market going forward. You know my thoughts. You know I've got a program on building your wealth with a real estate investing and do-it-yourself property management course linked down below with a coupon code expiring on May 16th. We're going to have the largest price increase ever. We've got new lectures coming out for the courses as well, continuously updating them. And folks, I'm prepping, and I encourage you to prep as well for an opportunity to buy some real estate a bit cheaper towards the end of the year. Talk to you soon.